Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 28th, 2025, and we're diving into the first quarter earnings report of Bank of Marin. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Bank of Marin has released its Q1 2025 earnings, and there's a lot to unpack, from net interest margins to loan originations and deposit flows.
Revenue and profitability overview. Let's start with the financial highlights. Bank of Marin reported a net income of $4.9 million for Q1 2025, with a diluted EPS of 30 cents. How does this compare to previous quarters, John?
Well, the net income is down from $6 million in the previous quarter, but up significantly from $2.9 million in the same quarter last year. The diluted EPS of 30 cents, however, missed the analysts' forecast of 32 cents. The net interest income was $24.9 million, slightly down from the previous quarter, and the efficiency ratio increased to 76.4%, indicating higher non-interest expenses.
Operational efficiencies and future outlook. Despite the dip in net income, Bank of Marin's net interest margin improved to 2.86%. What factors contributed to this, and what does the future hold?
The improvement in net interest margin is largely due to strategic reductions in deposit rates and a favorable loan origination environment. Loan originations were $63.6 million, significantly higher than the previous year. CEO Tim Myers mentioned that these trends are expected to continue, positioning the bank for further margin expansion in the coming quarters.
Credit quality and risk management. Credit quality is always a concern for banks. How did Bank of Marin fare in this area during the first quarter?
The bank reported a $75,000 provision for credit losses, with non-accrual loans at 1.59% of total loans, slightly down from the previous quarter. Classified loans increased to 2.77% of total loans, primarily due to downgrades in a few commercial relationships. Net charge-offs were $825,000, which included a significant charge-off from a non-owner-occupied real estate loan.
Capital and liquidity position. Let's talk about the bank's capital and liquidity. How strong is Bank of Marin's position?
Bank of Marin's total deposits increased by $82 million to $3.302 billion. The tangible common equity ratio stands at 9.82%, and the risk-based capital ratio is a robust 16.69%. Additionally, the bank declared a 25-cent per share dividend, marking its 80th consecutive quarterly dividend, which is a testament to its strong capital position.
Key takeaways. In summary, Bank of Marin's Q1 2025 performance shows a mixed bag with strong deposit growth and improved net interest margins, but a miss on EPS expectations. John, any final thoughts?
Overall, Bank of Marin is navigating the current economic environment well, with strategic initiatives in place for future growth. Investors should keep an eye on their expense management and credit quality in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Bank of Marin's performance in the comments below.